Good evening all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Wednesday, and we're now at the 19th of August, 2020. Well, a setback day. Whoa! We haven't had one of these in a while. A sea of red behind me with two exceptions, basically. IWM was up 1 penny, and you had USO up 6 cents. Everything else is down. The market's entered a correction phase. Now, is it a big break? So far, it isn't. We're not getting a lot of follow-through tonight in the futures markets. I think it was the FOMC note minutes, if you will, notes I call them, but minutes, that we kept looking at and diving through. And I think they finally said maybe they weren't bullish enough. Remember, bull markets like to get more bull information. When they don't, it's like a child. Uh-oh, you're taking away my candy, and the market can go the other way. That's why I hate reports going through them, because you never quite know. What surprised me on this one was it was a delayed reaction. The market did not first react to it. It took over an hour. If you go and you look at when the market break began, it was about an hour after this came out that the market started faltering, and then it started rolling to the downside. It began in the metal markets, then the dollar took off to the upside, and other markets took down. So where are we? Well, we still haven't filled a gap in this chart over here. This is the tech sector. The market had a reversal today. It's been fighting a battle here in the 114.15 level, I think you could say 114.90, 11500 level. The pattern is still bullish. You've got higher lows and higher highs until the market takes out 114.10. The bullishness stays. Market is over the 18-day average. The bias stays. What's not right that I'd rather see in the market, I'd rather see the 18-day average above this last break low, because if you fell to it, in theory it offers a cushion barrier. And because to get to it, you'd have to break the trend. So that is concerning. So where's the momentum in the market? Maybe we should take a look at that. And it's still embedded. So the Bollinger Bands, they're far away. That was the chart I got rid of too soon. The slow stochastics are still embedded. So until you lose that, even if you take out 114.10, I say the bulls will stay with their trend until the red line closes under 80, and at that point they'll throw in the towel. It may not happen, you don't know. Here's one that you threw in the towel. This is how SMH looked yesterday, day before, and the day before. It had been flirting with the staying embedded, and then it rescued itself on Monday, kept that rescue going a little bit, let me get to there, yesterday, and now we get the reversal and follow through. You lost the embedded reading. It's time to come out of this market. So if one is long, what I'd be telling him doesn't mean I'm right, until the red line's back over 80, and it could happen tomorrow, but until that occurs, no, I think it's time to back away, give the market a shot and see if it wants to correct anymore. I still look for support at 169.30. XLI, it's the same thing. Until that re-embeds, I want to clear the decks. Why not bearish? Well, you're over the 18-day average here. You're over the 18-day average there. When you're over, your bias is up. But when you lose the momentum, it says after an embedded reading that the odds favor you in for more of a correction that could result in prices going back to the 18-day average at closes. In XLE, I wouldn't touch this. I said that this narrow range keeps you away from this market, and I've said it over and over. You want to get frustrated, lose your hair, I like my hair. I don't want to lose it, because you think you're breaking out and you don't. You think you're going to the downside, you don't. You just stay in there, and eventually it ends. And eventually it's a top or a bottom. I don't know which, and I've got better things to do than trying to write thesis on which one it's going to be. In QQQ, you still have the embedded reading. Until it's lost, that means that while we're getting a break here, and tonight we're seeing the NASDAQ breaking again, how much of a break? See, when you look in the morning, you'll have an idea what you're dealing with. But at this point, until the red line closes under 80, I still am in the bull camp. EFA is the emerging markets. You have the embedded reading. So until it's lost, I say the pros are still there. Everything is still bullish on this chart. You neutralize the swing line if you take out 64.62, and the way that the stock indices are down tonight, that could easily happen. Although when we go to sleep, you could be the other end. Remember, the Fed minutes came out at 1 o'clock. Asian markets, take your time, look up, go to Google, what time is it in Japan, China, other Asian centers, Hong Kong. They have a chance now in the evening to digest what all that means. From there, it comes out at 1 o'clock in the US, that's 7 o'clock in Europe. Their main markets are closed. So to go from Asia there and back to us, it's the old yin, yang, and you don't know what you're at in America when you wake up in the morning. Some of us, like me, will be waking up looking and peeking at the market. It's not a great night for sleep, but I do that. But that's what a trader's life is about. It's not the perfect life. Would I recommend this to people? I probably wouldn't, although it's kept me younger than most of my friends. In looking at the market, higher lows, higher highs, if you take out 181.49, like the futures, you break the upward pattern. That does not mean you're turning bearish. You have not turned bearish on the futures, but you've left the bullish pattern. So this is what we call that bounce in this big break that we had, and all it did is we had our first rally, and now we'll see if the market goes and makes lower lows or not. A lot of traders will be looking at that. A lot of traders that trade off weekly charts are going to use these breaks to put on some positions in silver and gold, the key moving averages. Would not surprise you. As we look at the gold miners, and you can see what this market did, you got to 140.77 today. You filled in the gap from the high point here. Not doing much. So with this, you haven't turned the trend on. You still have the swing line with higher lows and higher highs, but you lost the upside bias. It's now down, and momentum went flat on you. Gotta wait. The market's in a stall period. In TLT, all that you did after this big break is you rallied right into the day with the FOMC announcement, the minutes, hit the 100-day average and fell apart again. So the market is still bearish. If we take a look at right here, you've got numbers that are under 20. They were under 20 yesterday and the day before. So until you get the red line over 20, the pros are in control of the bear side of this market and pressing on it rather hard. You can see how it's widening out the bottom right through here. In FXE, the first challenge yesterday of the upper Bollinger Band is where you know what I said, a broken record. That's where I think the pros are going to take money off the table with extremely tight stops. If it doesn't just run, they're going to come out. Bingo. That's what I think occurred. Did we break the uptrend? No. But we're correcting an overbought condition. Both numbers are under 70. They're already out of that overbought condition. But you got to wait and see what it does on the setback right now. That'll tell us a bigger story. Our firm, what do we do at Linn Associates? We write on all the markets. I don't care if you're looking for financial strategies, grains, the soft market, the lumber market for some of you. Lumber's been on fire. The sugar markets, the grain markets, the energies, ethanol. We write on all this. You'd like to see what our research is about, both for the futures, the fundamentals, and option strategies. Just simply go to our website, www.iraepstein.com. You'll see the free offers. You get 2 weeks sent to your email box. You decide if having an account with us or getting some of my research, because that entitles you to get some of this under some of our plans. Fits in for you. I'm Ira. You have a great day, and I'll see you tomorrow.